Hello, this is IvyTrader1 from ivyleagueotc.com, here today to bring you the chart of Spph, Spencer Pharmaceutical Inc. First thing we're going to notice with the stock is that looking at the moving average here, we see that the 50-day moving average is moving well above the 200-day moving average. And we can see that those lines are clearly diverging from each other. This is great news simply because it means that the stock is becoming more inherently bullish as time is going on. As we can see, coming to August, this is where the lines first decided to cross. And as we can see, they were pretty close here, and they finally started to diverge and have continued to diverge until last Friday's trading period. Up until last Friday's trading period. Our first step for the day is to identify the lines of support and lines of resistance. As we can see, lines of support with this stock is pretty simple. Old resistance was right here at 0.28, and that's going to be our, once old resistance is broken, it becomes new support. So that's going to be our support right here at 0.28. As for a second line of support, we always want to know worst case scenario. As we can see, every time the stock has dropped to the level of 0.20 over the past month, it has been met with buyers. So 0.20 is going to be our second level of support. As for resistance, we're going to start with the heaviest level of resistance, which can be found right here at 0.99. The old peak is always the new resistance, so that's what that's going to be. And now we're going to look for the next level of resistance, and that level can be found, let's see, right here. And what line is that on? That would be right at, let's see, well, we just broke that. Snow clear right here at 0.51. 0.51 is going to be the next key level of resistance. As we can see, this would have been a level right here at 0.30, but we recently just broke that level, making that level of resistance void. However, I'm still hesitant to make 0.30 a line of support simply because we haven't broken the line with a surge of strong volume. So as for now, 0.30 will not be a line of support. It's just going to be a number to watch, 0.30. Next, we're going to look at the ADX. As we can see from the ADX, the stock has taken quite a beating, with the negative DI rising high above the positive DI, and an ADX of 44 indicating a strong trend. However, not everything is negative. As we can see, in the last couple days, the negative DI has been coming down and converging. When the negative DI is above the positive DI, the move we wish to see is convergence, and as we can see, the positive DI is starting to climb. So that is a ray of hope that the trend is starting to, this negative trend is starting to weaken. And as we can see, the negative DI is pretty much at a peak here. Usually it will never stay this high for too long. So, and as we can see by this convergence, it's holding true here. The next indicator we're going to look at is the accumulation and distribution indicator, which, let's see, as we can see, has been in an uptrend lately and has started to increase. Let's just show the movement. This is really important because it tells us that buyers are starting to buy and someone is accumulating this stock, whether it's falling or climbing. which means that there's interest, and that's always what we want to see. Last but not least, what we're going to look at is increase of volume in the month of October. As we can see, during the month of October, there have been many surges of volume, meaning someone's taking interest in this stock, and they're taking interest over a period of days instead of simply just one day. As we can see here, when the same thing happened in the past, in fact, looking at this candlestick here, the stock actually dropped quite a bit during this period right before it rose to 0.99. So anyone who bought the day before was rightfully scared, but the stock managed to close upward, as we can see. In fact, because of the way this candle is shaped, the stock must have opened at the bottom and climbed all the way at the top. However, as we can see, after a few days of consolidation here, the stock had a huge surge, climbing all the way from 0.35 all the way to 0.99, as we can see. And we have just about the same setup here. Now we might not exactly see 0.99 again. However, we are expecting some type of surge, some type of second surge. Usually stocks don't just surge once in a lifetime. They usually follow patterns of being hot and cold. And as you can see, it was hot over here. We've been cold for a long period of time, about 2 months of small activity, and then boom, suddenly we see volume again. So we're assuming that there's going to be another big move, and just because of the way the stock's been consolidating and the way the stock has recovered from the lows, we believe this move is going to most likely be up. Last but not least, the last indicator we'll look at is the RSI. As we can see, the RSI is at 59.24, which is a bullish RSI, and it's also coming down from the highs, which is good. A bullish RSI at 59 means that the stock is charged and it's moving upward. However, it means that we're not yet overbought at a critical level above 70, especially 80 and 90, which means the stock has a lot of room to run before needing to come back down. And as we can see in the past, once the stock starts to touch that level, that critical level of 0.70, it starts to come down. In fact, that's what happened here. In conclusion, the team at ivyleagueotc.com sees many bullish indicators in SPPH. As always, use proper trade management, and please do your full due diligence before entering and exiting the trade. See you in the winner's circle.